Wilder put forth a simple system for trading with these directional movement indicators. The first requirement is for ADX to be trading above 25. This ensures that prices are trending. Many traders, however, use 20 as the key level. A buy signal occurs when plus DI crosses above minus DI. Wilder based the initial stop on the low of the signal day. The signal remains in force as long as this low holds, even if plus DI crosses back below minus DI. Wait for this low to be penetrated before abandoning the signal. This bullish signal is reinforced when ADX turns up and the trend strengthens. Once the trend develops and becomes profitable, traders will have to incorporate a stop loss and trailing stop should the trend continue. A sell signal triggers when minus DI crosses above plus DI. The high on the day of the sell signal becomes the initial stop loss. The chart on the screen shows Medco Health Solutions with the 3 directional movement indicators. Note that 20 is used instead of 25 to qualify ADX signals. A lower setting means more possible signals. The green dotted lines show the buy signals and the red dotted lines show the sell signals. Wilder's initial stops were not incorporated in order to focus on the indicator signals. As the chart clearly shows, there are plenty of plus DI and minus DI crosses. Some occur with ADX above 20 to validate signals. Others occur to invalidate signals. As with most such systems, there will be whipsaws, great signals, and bad signals. The key, as always, is to incorporate other aspects of technical analysis. For example, the first group of whipsaws in September 2009 occurred during a consolidation. Moreover, this consolidation looked like a flag, which is a bullish consolidation that forms after an advance. It would have been prudent to ignore bearish signals with a bullish continuation pattern taking shape. By contrast, the June 2010 buy signal occurred near a resistance zone marked by broken support and the 50 to 62% retracement zone. In this instance, it would have been prudent to ignore a buy signal so close to this resistance zone. The chart on the screen shows AT&T with 3 signals over a 12-month period. These 3 signals were pretty good, provided profits were taken and trailing stops were used. Wilder's parabolic SAR could have been used to set a trailing stop loss. Notice that there was no sell signal between the March and July buy signals. This is because ADX was not above 20 when minus DI crossed above plus DI in late April. The directional movement system indicator calculations are complex, interpretation is straightforward, and successful implementation takes practice. Plus DI and minus DI crossovers are quite frequent and chartists need to filter these signals with complementary analysis. Setting an ADX requirement will reduce signals, but this uber-smooth indicator tends to filter as many good signals as bad. In other words, chartists might consider moving ADX to the back burner and focusing on the directional movement indicators, plus DI and minus DI, to generate signals. These crossover signals will be similar to those generated using momentum oscillators. Therefore, chartists need to look elsewhere for confirmation help. Volume-based indicators. Basic trend analysis and chart patterns can help distinguish strong crossover signals from weak crossover signals. For example, chartists can focus on plus DI, buy signals when the bigger trend is up and minus DI sell signals when the bigger trend is down.